Real estate investing is one of the most powerful tools for building wealth. But the challenge is understanding the how. Many people jump in without a strategy, leading to costly mistakes. This series will explore the different aspects of the industry, whether you're looking to become a professional, an investor, or simply you want to make smarter financial moves. Hi everyone, welcome back to my channel. My name is Nandi, and on this channel I share all things finance, career, and business in that direction. I believe in empowering women in corporate America to leverage the 9-to-5 job to build scalable side businesses. Job? What the heck is that? It is that kind of day, but we are going to make it. We are going to make it. On my channel, I share with you guys my personal journey of how I built a multi-million-dollar real estate portfolio, how I was able to take my own personal career from about $30,000 a year to well over $200K in about 10 years. And along the way, all of the money management lessons that I've learned to help me build what is close, fingers crossed, to almost $1 million in net worth. In today's video, however, we are focusing on real estate. This whole week, for a fresh new video on a real estate series, I will be sharing with you guys step by step how to buy your first real estate investment property. My goal is to teach you everything you need to know from beginning all the way to managing your own property in a way that is digestible, easy, and that you can keep building off of. This video series, however, is just the beginning. You will take it, you will learn some of the basics that you need, and then you will start taking action. Why specifically choose real estate? In my opinion, real estate offers a unique opportunity to create wealth and financial independence. However, success requires a deep understanding of strategies, risks, and a long-term planning mindset. So throughout this series, I'm going to be providing you guys with valuable insights, strategies, and real-world experience coming from yours truly that would help you make an informed decision on your own personal journey. So let's get started. So here are the three main pathways to real estate. Real estate essentially can be broken down into three categories, each with its own skill set requirements and financial opportunities. The first category is the retail or transaction-based category. This category is for those who want to facilitate real estate transactions. It often will include realtors, real estate agents. These are individuals who help buyers and sellers navigate home purchases and sales. It does require, though, for you to have a license. It does require for you to build a strong network. So you will have to develop your networking skills because you will need to know a lot of people because the competition is tight. And you also really need to understand your local market. If you're somebody who grew up in a city or a state for a very long time and really understand all the best neighborhoods, this could really be a profession for you. The third group of people in the retail aspect are real estate brokers. These are individuals who oversee agents and operate brokerages. This typically requires more experience and a higher level of licensing. This path is ideal for realtors who enjoy working with people, enjoy negotiating deals, and enjoy earning commissions on property transactions. Both realtors and brokers need to enjoy working with people, but brokers, you have to enjoy working with other realtors, teaching them, training them, and bringing them under your wings to help them grow. Because it's a great way of kind of extending your tentacles, because you will be getting paid commission if you have other realtors underneath you. This is an active business that depends on sales performance. In this category, there's a different group of people, and it's debatable to some people whether or not I should include them on here, but these are going to be wholesalers. Wholesalers are people who are a little bit more, what should I say, resourceful, strategic. Wholesalers identify undervalued properties and they then assign a purchase contract to investors for a fee. So think of them as the middleman between the seller who is interested in getting rid of a property and an investor who's interested in acquiring a property. These guys come in as a middleman. They pretty much like scour their neighborhood to look for interesting sellers who don't want to go through the channels of a realtor and sell their property in a traditional way. And the wholesaler will come in behind the scenes, work on a contract with them sideways, and then sell that contract to an investor who will then buy that property from the seller, but through the wholesaler. This strategy requires strong negotiation skills and a lot of market research. It's a grind. You really have to be out there looking for these properties. This was a profession that became really rich around the years 2010 to 2016, maybe 2018, especially after the crash. Because when the crash happened, a lot of people just abandoned their homes. So wholesaling really became a profession on the rise. But now, the market is so oversaturated. Property prices have gone up so much that being a wholesaler is a little bit more challenging now than it used to be. I also want to add one more thing. A fourth profession on the retail and transaction base are property managers. These are individuals who manage real estate properties, right? So usually these individuals tend to be realtors or brokers. So this is why they get to have their own category, and these people will be responsible in making sure that a property is managed effectively. Sometimes they will manage a property for one investor, or they will manage a property for an apartment complex. They make sure that all of the paperwork is completed. They make sure that all of the tenants concerned are answered on a regular or weekly basis. And they also make sure that they really understand the property management and leasing process. The second path is what I call the construction or renovation and development path. In this category, the focus is on improving, developing, or repurposing real estate properties. So, under this category, I have flippers. Flippers are individuals who buy undervalued properties, renovate them, and sell them for profit. This requires a lot of knowledge on market trends. You need to understand renovation cost and property management. It's an absolute must. Flippers also need to have a strong sense of tolerance for the unexpected, because you don't know if after you're done flipping that property, you will make enough to offset your cost. And you also don't know how things are going to go during that remodel, because things can go awry. And the reason why things can go awry is because of the next category: contractors and handymen. As somebody who has had my share of dealing with contractors and handymen who have screwed me over, I've lost money on contractors. It's just a rite of passage. I don't want to say anything negative about contractors at all. I've just had my experience, but I've also had really good experiences with contractors and handymen. These individuals provide renovation, maintenance, and building services for real estate investors. They are skilled tradespeople and they are in high demand. Let me tell you, especially the great ones. The great ones don't come by often, but every once in a while you are blessed by the gods and you get one who's great. And these individuals can generate a pretty hefty and steady income. And the ones that are extra smart end up becoming real estate investors themselves, because the hardest part of real estate is not buying a property, it's getting that property to where you want it to be. And usually, if you are somebody who already knows how to do plumbing, HVAC, electrical, carpentry, you, my dear, can do amazing things. You invest 10 to 15 years and you can build a solid little real estate portfolio for yourself. Another profession under this category are developers, or you can call them builders. These are individuals who plan and construct new properties. The biggest reason why right now real estate properties is so high is because we've put so many regulations against developers and builders that we're not getting a lot of new properties flooding the market. So whatever scraps we have right now, everybody is fighting for these scraps. Now, there is a legitimate reason why we have regulations because for quite a long time, some developers or builders were cutting corners. However, I'm hoping we reach a place where there's compromise because these property values are out of control. As somebody who has real estate property, I appreciate that the properties are the price that they are because I bought a long time ago, but I have aspirations to keep buying. So hopefully we can fix many of the challenges we're having with constructing newer properties. This particular profession requires significant capital and a deep understanding of zoning laws, the construction project. And by construction project, I don't mean like a contractor who needs to understand how to do some of the fixes around the house, but they really need to deeply understand construction from beginning to the end, the excavation process, prepping the land, all those different things. And they also have to have a strong understanding of various financing options. Because in order to build those homes, you need financing, but you also need to be able to support new owners to finance your properties. Ideally, most developers or builders will pre sell their units before they actually start construction. And that's one of the best ways for them to raise the funds to be able to build various complexes. You've been in a typical American neighborhood. Most of our neighborhoods are constructed by developers who will buy land and then they will build a neighborhood around that land. This path is really best for those who enjoy hands-on work. They enjoy project management and they are excellent at taking on risks, as the results are often based on a successful execution. And being a developer is one of those perfect examples of the higher your risks, the higher reward. Similar to people who are flippers, the higher your risk, the higher the chance of success. I like flippers and builders because these two individuals are people who really can see the highest return in real estate, but that return is very risky. The third path, this is my personal favorite, is the investment path. This is centered around ownership and wealth building. This particular category involves buying and holding property for long term financial gains. Investors can focus on residential real estate. So we're talking single family home duplexes and some small multifamilies up to 4 units, or apartments that generate rental income. These apartments can be anywhere from 6 to maybe 12 units. Sometimes they can be a little bit higher, but usually these are smaller apartment complexes. And then you have commercial real estate. Think office buildings, retail spaces, and industrial properties that cater to businesses. In this section, you also have land investments. With land investments, individuals are purchasing underdeveloped land for resale or development. A lot of people who are aspiring to become developers will often start collecting land in areas that they deem desirable and then eventually raise the capital to build in those neighborhoods. And you can develop apartment complexes, you can develop malls, you can develop practically anything you want. This path, though, is ideal for the people who are seeking passive income. Unlike the first two sets of income, where you have to be very actively involved on a daily basis, with this path, which is my personal path, your income is more passive, or I should say semi passive. I don't believe in true passive income until maybe 15 to 20 years after you started working. This is also great for long term wealth building and financial stability because as an investor, you are benefiting from the appreciation of the asset. It's really important that you understand the different paths to real estate investing because when somebody says that I'm in real estate, people often tend to think only about the real estate investing path, but they don't realize that the profession is really big and it has many different components and subcomponents. And I'm sure I didn't even tap into some of the different ways that you can participate in the real estate investing field, or industry. So, however, for the sake of what I talk about on this channel, I would almost be exclusively talking about the real estate investing path and not those other two paths. I collaborate with people on both of those paths, but I personally am not investing in those paths. Now, let's go ahead and talk about residential real estate investing strategies. If you are interested in investing in residential real estate, here are some key strategies that you most likely will be employing in order for you to be able to scale up your portfolio. Short term rentals or Airbnbs or STRs. Short term rentals are vacation homes and corporate stays. These tend to have really high cash flow potential, but they do require more management, marketing, and compliance with regulations. Vacation rentals have always been here. If you go into touristy areas, I mean, lots of real estate investors have been playing into the vacation space for a very long time. However, around the year 2010, 2012, I believe, maybe 2014, I don't really remember, but somewhere there between the 2010 and the 2015s, Airbnb really gained steam in popularity. It opened up doors for a lot of people to make a lot of money by renting out either a spare bedroom in their existing homes, or people actually started buying homes just for the sake of putting it on Airbnb. And before you know it, Airbnb completely changed the hotel industry, or at least our perception of the hotel industry. To be very honest, they did not disrupt the hotel industry in the same way Uber disrupted the taxi industry, but they came really close. They were eventually stopped by a lot of local regulations that just made it very difficult to practice the model in the city or non touristy areas. The second strategy here is the midterm rental or MTR. This, think about travel nurses, remote worker, corporate leases, people who are looking for a fully furnished property but do not want to sign a long-term lease, the traditional long-term lease that you would sign that requires for you to live at a property for a year, 2 years, etc. With midterm rentals, people can stay a minimum of 30 days, and most of them tend to stay for a maximum of maybe 3 to 6 months. Usually, it's very rare for them to stay for more than 3 to 6 months. I've personally currently have a midterm rental, and I also have an Airbnb or a short term rental. Midterm rentals often will offer you a lower turnaround time than a short term rental, and they also have a semi higher income potential than a long term rental. However, you still have a lot of the monthly cost and maintenance pretty similar to an Airbnb, not as high, but you do have quite a bit of ongoing maintenance. So, for example, you might have to provide linens, you might have to pay for electricity, gas, water, internet, all of those different things that come with an Airbnb. Only this time, the person is staying for 30 days or longer. The last strategy to use, which is the traditional, the mother of all real estate investing, this is the benchmark by which we make all calculations, long term rentals or LTR. This is your traditional rental property strategy where a tenant will actually sign a lease for a year or more. This tends to provide very stable cash flow, and it definitely requires a lot less maintenance from your part, especially if you have a property manager. If you have a property manager, they are most likely handling everything for you, the communication, the maintenance, the turnover. You really do not have to do much except collect the cash. Unfortunately, of all these three strategies, this one is the one that will give you less cash flow, but you always have to be honest with yourself. I used to prefer Airbnbs until I really started calculating the numbers. Airbnbs and even most midterm rentals are very seasonal. So I found myself sometimes going a month without having any bookings, especially in the wintertime. December, January, February is so hard. If you don't get somebody who moved in October or November, you will struggle December, January, and February. And for me, when I started doing my calculations, I realized that I might actually be better off having a long term tenant as opposed to a short term tenant. That was a tough one for me to accept, but now I sleep easy at night because I don't have to worry about whether, where is my next paycheck going to come from so that I can cover the mortgage. Now, let's talk about choosing the right property for you. Investors have to decide which type of property will suit them best. Single family rental, multifamily, which one works best for you? I have my own views and perspective. They have taken me a long time. However, let's first talk about the single family home. The single family home is your traditional brick and mortar family home. This is easier to manage, generates decent income, has really good appreciation, and as also they have really good resale value because you are more likely to sell it to a family looking for their first home, looking to expand the home, or someone looking to start a family. These tend to be only one unit. You move in, you stay in, it's your house, okay? So this is the single family home. Then you have the multifamily residential, not commercial, multifamily residential. These offer higher potential for income because you have multiple tenants. However, it also does require more oversight and management on your part. Usually, when you have a multifamily, the income is better not just because you have more properties, but it also allows you the opportunity to maybe live in it while you're renting out all the other properties. And let's say you are not living in it, it allows you the opportunity to have a little bit more peace of mind, knowing that if one tenant moves out, you are not flipping 100% of the cost of paying for the mortgage. I love four units just because not only is the cash flow better, but the security that expenses will be covered and that vacancies are not going to completely bankrupt you is very high on my list. I shared with you guys the strategies so you understand the paths, you understand the strategy. So, what exactly is real estate? So, real estate, is it a business or is it an investment? One of the most important distinction for you to understand is whether or not for you real estate is treated as a business or an investment. This is a very personal thing. Traditionally, real estate is primarily an investment, especially when you're buying real estate for the sake of holding it and then watching it grow over time. It's almost impossible. Actually, I shouldn't say impossible because you can do it by dumping a lot of money into it. Your cash flow can be high up like this. Or if you have some lucky situation that was a really, really interesting deal. But for most of us on this channel, I make assumptions based on the plurality and the average. For most of us who are average people, real estate is going to pay you dividend after a few years, if not a few decades. It's a worthy investment, right? However, you can run real estate as a business or you can merge various strategies together, right? And whether or not real estate is a business or an investment also depends on your level of involvement and the strategy that you are using. A business requires active participation in property management, in flipping, or in running a real estate agency. It involves daily operations and decision making. An investment, however, generates you passive income where the property appreciates in value with minimum involvement from you. Investors, we tend to focus on long term appreciation and cash flow. So, whether real estate is a business or an investment goes back to that very first section in this video where I'm talking about the different paths. If you're in a retail based situation, real estate for you is a business. If you are in that second situation under construction, real estate is also a business. However, that third path, which is the one I'm on, real estate is primarily an investment. However, there are always nuance. The beauty about real estate is that you don't have to choose one or the other. There's a hybrid approach. Many investors operate in both spaces, balancing actively running business activities with passive investment strategies. Understanding the difference between these two approaches is critical in determining your strategy and your expected return and time commitment. I gave you guys a lot of different strategies and nuggets today. Before we go, I want to strengthen one thing in your mind: the versatility of real estate. One of the greatest advantages of real estate is its versatility. You do not have to choose one strategy, one path over the other. You can combine multiple strategies to enhance your success. In fact, diversifying within real estate can probably provide stability and increase your profitability. For example, you might start with a long term rental for consistent cash flow while also investing in a short term rental for higher profit potential. Some buyers buy multifamily properties, keeping one unit as a long term rental while using the other for short term rental stays. That's exactly what I do. I literally right now have a property where I have multiple long term rentals and multiple short term rentals. So I'm playing in both strategies. If you're a contractor, you may flip a house while holding rental properties for passive income. By using multiple strategies, you can adapt to market changes, maximize your returns, and build a resilient real estate portfolio. I have a whole video coming up just on financing. You can secure private lending options or house hacking. The reason why I say and or is that you can borrow using private money or hard money lending, and then you can fix up a property and rent it out. If it's a multifamily, you may even be able to house hack by living in one of the units and renting out the other one. All of these different things will allow you as an investor to expand your portfolio with minimal capital coming out of pocket. Another thing I love about the versatility of real estate is that all of these multiple strategies will provide you a safety net. If one approach becomes less profitable due to market fluctuations or regulatory changes like Airbnb, another one can sustain your income stream. For example, when short term rental laws were being tightened up everywhere, a lot of those investors were able to pivot into mid-term rentals or long-term rentals. I did the same thing just this year. I converted my mid-term rental into a long-term rental. Combining strategies also helps you to create synergy. A real estate investor could renovate and flip houses for short-term profit, right? So now you're almost acting as a flipper, right? Or you can have a realtor who's also a property manager and an investor themselves. As you can see, there could be so much synergy between all of these different professional paths that I just shared with you guys. The key, however, is understanding how each strategy fit into your overall financial and investment goals. Real estate is such a powerful tool for financial growth. Thank you guys so much for following me through this video. So what exactly is coming up next? This series will cover 8 essential topics that will take you from the foundations of real estate all the way into managing your first property. I will be giving you in-depth real estate investing strategy advice. I will be sharing how to fund your first deal and common mistakes to avoid when you're looking to find the right deal and to manage your own property. I will also be sharing with you guys how to build a profitable real estate business without burning out. If you are serious about learning real estate the right way, without any gimmicks or get rich quick nonsense, join us in this series. I will be sharing with you guys a lot of knowledge, and I would also like to hear from you. There will be a lot of things, a lot of nuance that I will miss. What are your biggest real estate questions? Leave me a comment down below. And also, don't forget to like, subscribe, and hit the notification bells because there's a lot that I have coming up. Anything about finance, career, and of course, building a business. I'm in the process right now of building my own online business. That series is ongoing right now where I'm sharing with you step by step everything that I'm doing, my failures, my successes. You get to see it all. This channel is really here to be a source and a community for you. I want you to join me every week as I share with you guys videos every Tuesday, Thursday, and Saturday. Let's build wealth together. I'll see you in the next video.